Hello, folks. Welcome to this week's edition of the Satori Traders Precious Metals News. We looked at gold in the monthly time frame just last week. The reason I'm showing it again is to demonstrate that when we have a pullback or correction like we did in gold last week, it can feel like the end of the world. But if we back up and look at the larger time frames, we see that, as bad as that action feels in real time, it's really not significant. And so certainly, you can hardly tell that anything happened here in the monthly time frame. And then if we look down, our next time frame obviously is weekly, and there's nothing really new for us to glean here. I did notice that we can use Tim Morge's double the range trick, and this price range downward trending channel, if we double it, just coincidentally marked this correction or the top of that price movement as of last week. Nothing to say that price movement's not going to continue. What's really significant, in my opinion, and this is true of all the precious metals, let's see if we can do that. In the moving averages, we're headed towards a golden cross, which that's when it's more appropriate to talk about it in the daily time frame. Golden cross is when the 50-day moving average rises above the 200-day moving average. And so you can see there's the 200-day, there's the 50. We got a couple of more weeks probably before that golden cross occurs, but that will be another indication to investors, smart money, that it's time to get back into the gold market. Precious metals are in bull mode, rally mode. And just for fun, let's look at what tends to happen when we get that golden cross. Well, look here, and what is that? That's January of 19. This is the last time the 50 rose above the 200, and so price went from, where are we at, 12, we'll call it 1250 up to 2050, so $800. So that's the last time we got a golden cross. It marked an $800 price rally in gold. And so, who knows what we're going to see this time. As I've said, my target in the current upward movement is 2357, and I'm expecting that in 2021, early 2022. Here in the daily time frame for gold, we can see gold bumped up above 1900, which obviously that's a significant level. Psychologically, a big round number. We got the big, sharp pullback last week, but all it managed to do was get us back to this 1870 support and resistance level. And so we can see these two prior highs here. Obviously, that was resistance. And then we see the same level acting as resistance here. And then obviously it became support. That doji candle was right on the body of that candle, right on 1870. And then obviously support. There's another test of 1870 as support. And now we're back there sitting on that as a support level. It may hold, it may not. A pullback to the 200, I think it was last week or the week before when I was saying, a pullback to the 200-day moving average at this point, that's the fat pitch down the middle. I mean, gold is clearly demonstrating that it is back in bull mode with this, this strong, the double bottom around 1680 and then a strong rise. We've penetrated the 200-day moving average. We've got a golden cross coming up. I mean, gold is it's doing very, very well. And investors who are watching the markets, when they see this golden cross pull back to the 200, it's likely that we'll have new investors coming into the market, potentially accelerating the uptrend. And I would expect that the golden cross will be another accelerator of the uptrend. This is the same thing, silver in the monthly time frame. Last week's action, hardly a blip in this time frame. The daily time frame in silver now, and we can see we were trying to break out above the 2850 level last week, and clearly that didn't happen. And now we're playing with, looks like sideways trading range. Basically at this level, 2740 as support, 2850 as resistance, and just bumping sideways for now, kind of playing with the 20-day moving average as support and resistance. So silver's going to follow gold, nothing to worry about there. The mining stocks, this is in the weekly time frame, GDXJ. All we're really monitoring here is that our uptrend continues, that the mining stocks continue to be in bull mode, and everything says they are here in that weekly time frame. Here in the daily time frame, it's a little bit messy. So let me get, I'm gonna remove this gold colored pitchfork. We can see that it was acting as support here, tried to act as support here, but obviously we've dropped down below that lower median line of that Andrews pitchfork. Now we may get some support here on the extension level of that fork, but let's get it off this chart just to clear things up a little bit. So we can see that price clearly, this impulsive downward movement, both the metals and the stocks, the dollar had a big rally. That's what happened on Thursday, and we'll see the dollar here in a minute. So anyway, impulsive downward movement, but stopped, closed on the 200-day moving average and then bounced on Friday. So not great action, but isn't horrible either. Energy remains elevated. MACD is quite overbought. And so not really surprising that we got a pullback. And of course, the stocks are following the metal. Although again, I've said this numerous times, the miners are profitable at these levels. They don't need higher metals prices to be profitable. They're actually highly profitable at this point. And in fact, one of the few sectors that are throwing off real live cash flow. I mean, so much of Wall Street and stocks, it's bullshit and puffery, gap adjusted nonsense that makes it look like they're really making money, and really all they're doing is borrowing money at essentially no cost and buying back their own shares. Anyway, let me not go off on that tangent this morning. Still, same kind of story. We were pushing into resistance at the top of this. This is a modified shift pitchfork. Hit that level, impulsive move downward, reaction to the dollar's rally, tested the median line as resistance on Friday, and then of course we'll see what happens on Monday. And we can see here the golden cross that I was referring to. Still, the silver mining stocks have been more bullish than GDXJ for several months now, and we can see that again here where we're getting the golden cross in SIL earlier than in GDXJ, and I don't think we made that point. So we've still got a couple of weeks before we get a golden cross here in GDXJ. And again, that is likely to serve as an accelerator in this precious metals bull market. Based on previous bull markets in the mining stocks, we've probably got another 4 months to go before we're looking at taking some money off the table. There's SIL we already talked about. Endeavour Silver. So I was looking at this, chatting in the comment section last week, and took a closer look at Endeavour. And it is a mid-tier silver miner, U.S. listed. And so investors who are limited to U.S. listed stocks, this is a silver stock that you might want to have on your candidate list. They have 3 producing mines in Mexico. Of course, Mexico is a mining friendly country for the most part. They have uprisings from time to time, but that's true in a lot of countries. It's even true in America these days. And so if we look at Endeavor's corporate presentation, we can see mid-tier producer, 3 high-grade underground silver mines. When you start looking at the producing miners, it's really different than the juniors, because you see them, they'll start talking about, we're going to optimize existing operations, we're going to discover new ore bodies that we can add to our mining stream. And so it's just a little bit different when you're looking at corporate presentations for producing miners. And so we can see they've got their 3 producing mines in Mexico. They're doing exploration and development activities in Chile. Chile's had some social unrest in recent years. Let's see, there was a couple more slides here that caught my attention. I think if we go to 28. And so here's the 3 producing mines in Mexico. They're working to expand those resource bodies. And that's a just interesting point to keep in mind about mining. It's a depletive industry, meaning that as the miners do their thing, as they mine the precious metals and bring them to market, they are depleting their resources. So while they're bringing income in through the front door, they're taking inventory off the balance sheet in the back rooms. And so they have to continually be looking for new resources to mine. And so that's one of the things they're talking about here is we're doing development, we're adding to existing ore that we can mine. And then these are their development and exploration activities. And then if we always want to look at the share structure, and so in Endeavor's case, we see fully diluted, they've got 171 million shares outstanding, which is not bad. Market cap, there it is, $1 billion. And so mid-tier miner, $1 billion market cap. Most of the mining stocks that have large positions in this current bull market are small cap and micro cap miners, well, until they grow, like newfound gold. And when they go from $3 to $10, they're not micro cap anymore. But anyway, for the most part, I'm focused on small cap and micro cap miners in the current bull market. I feel like that's the sweet spot. When we look back in hindsight at this bull market, where were the largest percentages of growth? I suspect that it will be in the emerging miners. So let's see. I think this is a repeat. Basically, it's the same information. Interesting point here. So when we're looking at these U.S. listed larger miners, like an Endeavour, they become one of the components of the ETFs. And so in this case, it's GDXJ. 11% of that ETF is EXK. And so as money flows into the mining ETFs, the ETFs have to turn around and buy shares in the underlying components of the ETF. That obviously makes sense. And so that gives us an additional source of demand for this particular stock. As retail investors decide that they want exposure to silver and gold mining stocks, some of them will invest in the ETFs, and their money will subsequently flow directly into the stock. And so that's just a fundamental factor in favor. In the technical arena, the stock's looking pretty solid. It's made a nice price movement and bumped into the 750 level, which is a significant resistance level going back to the previous bull market in the precious metals. And so we can see, there it is as resistance, tested multiple times as support. When it failed hard enough that price was unable to test it from the underside as resistance. And here we are in 2021, finally testing that level again as resistance. We can see with the pullback last week, that first test failed, but so far has only pulled back to the next obvious support level. So anyway, on a technical level, Endeavor's looking good. In MACD, obviously we were at an overbought level in that indicator. So another suggestion that price movement might be a little bit overdone. What I was saying in the comment section is that I was hoping what would really be bullish for EXK was to rise above 750 and establish that level as support. And obviously that didn't happen last week. While we've got this example of MACD, let me point out that MACD is not a bounded indicator. It can go to plus infinity and a minus infinity if it wants to, but there tends to be a ranging effect, and that's obviously what we're seeing here, where previous highs and lows in the indicator tend to mark the extremes of overbought and oversold. And so we can see now, here we are, this is the third time where price is rolling over when MACD reaches this level. And so this phenomena repeats fairly regularly. Let's move on to the US dollar. And of course, this is what the metals were reacting to last week. For most of 2021, this level has acted as support. And here we are again bouncing on that level in the weekly time frame. Now, this chart is by no means bullish. I mean, the moving averages both pointing down. Note that we failed to get the cross. That would have been bullish, and that did not happen with the moving averages. MACD is in bear mode. Stochastics is in the basement. Energy level in the basement. Here in the daily time frame, this is just one more example, or the latest example, I suspect, of a counter trend rally running into resistance and then failing. And so this we see on Thursday, this is what the precious metals were reacting to. It was this big bullish movement in the US dollar. Obviously on Friday, that movement rolled over and is now sitting on the 20-day moving average. We'll see what next week entails. Energy is rising, which of course that's bullish. MACD is rising, but clearly in bear mode. So dollar is still kind of undecided between the daily and the weekly time frames. Interest rates, we still got this sideways bump going on. This is the weekly time frame. MACD obviously has given us a sell signal, although this is the kind of, whipsaw. I wouldn't want to trade that MACD sell signal there. Energy starting to fall some more, still elevated, still higher, or still high energy level. In the daily time frame, more of the same, bumping sideways on the 50-day moving average. Got a support level here. Energy is not elevated. MACD sideways. Equities, more of this bumping around 4,200. We tested support at the 20, popped above on Friday, got some bullish action, bull mode, energy elevated. Same thing in the Dow, pushing off. Looks like we're establishing this level as support now, perhaps solid support. MACD buy signal, energy elevated. In the Nasdaq, this is a nice big bullish candle on Friday, obviously closed near its high. That's the 20 dropping below the 50. That is a bullish candle, suggestive of higher movement next week. We've got MACD moving up into bull mode. Clear's still on a buy signal, yes. So bull mode, buy signal, energy elevated. Yeah, Nasdaq remains the more bullish of the markets, in my opinion. These markets are overbought, referring to the Dow and the SPX. They're overbought, overextended. They're trying to make new all-time highs. Brent Crude managed to push up through that $70 level. Obviously, we'll be watching this movement closely to see what happens from here, whether this is a sustainable move or not. Bitcoin, just as a quick look, last week was not bullish. This is an ugly chart. Energy is trying to rise. Perhaps MACD is hinting at a new buy signal and perhaps an attempt at an upward movement. Strong resistance overhead. And that is all I have for this week, folks. Have a fantastic week going forward.